first two deals, I had to come to an agreement that I don't I don't think it was a play for money. I think it was an education is the way I look at it.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello, welcome back to Pillars of Wealth Creation. I'm excited to have Hamza Ali today joining us. Hamza, how are you doing today?
I'm well, Todd. Thank you for having me. Doing really good.
Awesome. Well, excited to have you on. A little bit about Hamza. He is a multifamily real estate investor and developer. Grew up in Dubai and immigrated to the U.S. in 2014. And you have a company called Gray Spear Capital based in Houston. Currently has a portfolio of right around 1,000 units, and maybe it's changed since this bio. We can dive in more, of course, but in the Houston and surrounding areas. And you've got some cool stuff going on, so we'll dive into that. But before we do, you have a lot of strategies that you're using. You're using innovative strategies to like maximize your investors' returns, also to benefit the communities that you're investing in. And I guess with that, why don't you just tell your story? So I'm not telling it.
Yeah.
Dig in, dive in, tell our listeners a little bit more about what you got going on.
Sure. So I'll just start with a really brief background. I moved to the United States about 6 years ago. And initially I moved to Southern California. I love that place. Dubai is a beach city for those of you who don't know. And I felt like Southern California very much related to that beach life, that outdoors life. So I moved there, hung out there for about 8 months, realized it was way too expensive for me at the time to do business. I didn't have that much money when I moved. And so somehow found myself in Houston, Texas, where the real estate was growing. I could definitely see that Houston, Texas was like a melting pot at the time. That was so amazing for me to watch. You walk into the mall, you hear like 20, 30 different languages, and this is a spot that, an immigrant like me could very much relate to. So I just got started there. Found a small piece of land. I found 4 acres of land at a steal compared to anything that I could have, even looked at in California. Purchased a piece of land, developed my first real estate property, my first deal. Now,
your first deal was a development deal?
It was a development deal.
How big?
And it was 4 acres. So I had 66,000 square feet of ground up development. Now, this is actually the expertise that I came with. So my expertise is ground up development. I worked for one of the sixth largest developer in Dubai. So I had a lot of expertise in large scale development. I just didn't have the money.
Yeah.
So I've seen things go from sand all the way to like beautiful skyscrapers, but so I had that expertise. I just didn't have the equity to put into my deals. And so I walk in, I bought that piece of land. I got it at a very discounted rate at the time in 2014. And I walked into the bank and I told them, hey, bank, I'm here. I'm from Dubai. Give me money. And they shot me down. And I was like, why are you guys shooting me down, man? I have I have equity. I bought this land. I paid cash for it. They're like, well, it doesn't work that way here in the US, right? You need 2 years of tax returns. You need to have a social security number. You need to have, there's criteria. It doesn't work. You can't just secure a loan just because you have a land. And I was like, oh my God, what am I going to do? And mind you, this was all the money I had at the time. I had put into this land. And so I'm thinking to myself, I'm like, oh my God, okay, I just spent every dime I had on this piece of land, and this guy's telling me that he's not going to give me a loan. So I walk into a couple other banks, same story. There's a process. Give us your tax returns. And obviously, me being an immigrant, I have no tax returns, right? Where am I going to bring them from? And that was kind of where I was pushed to the corner to syndicate. I figured out that, oh my God, okay, so if I have somebody else sponsor the deal for me who has a pulse, and a good credit score and a tax return, you know what? That'll do. So I went back to my first banker and I told him, listen, banker, I don't have these things. Do you know someone I could talk to? And he's like, you know what? Actually, now that you say that, I may have a person who helps who helps cases, certain situations, and he may be willing to talk to you. So I went down, I talked to this gentleman, and he was more than happy to provide his credit and his 2 years of tax returns for the project, just because I had come up with an elaborative business plan as to what I saw happening at the time. Exited that deal in 2017, sorry. So I started construction on that deal in 2015, completed 16, filled it up, and 17, we exited that deal. And you wouldn't believe, man, we probably made 100% or maybe more on that ground up development. But guess how much I took home? Not much. But but in the process,
better than nothing though, right?
Better than nothing, absolutely. Better than nothing.
Yeah.
But in the process, I learned all about this fascinating structure that was syndication. And I did it not out of lust for equity. I actually did it just to get my business off the
Just to do
ground.
something.
And
Yeah.
I kind of accidentally jumped, came onto this process. And I didn't realize that there was a whole world of people out there, creating wealth and buying real estate through creating funds or syndications and whatnot. I just knew that, okay, if I partner up with someone who has a credit score, I'll be okay. Now, the good thing is that when I did exit that deal in 2017, I had accumulated that 2 years of tax returns, right? So now I qualified to get my own loans, and I didn't need a person to sign a key principal to sign on my debt for me. And that is kind of how I stumbled upon real estate investing, development, and then later on jumped into acquisition. And I think that's just fascinating.
Yeah, it is fascinating. So did you have like a full-time job also, or like a run a business, or was this it?
This was it. This was, I had all my eggs in one basket,
Yeah.
and this was the basket.
Yeah.
And if
And
it
you
didn't
had
work
to
out,
succeed.
and if it didn't work out, that's it. I go back home, right?
Yeah.
So those were it was a really challenging time because, at the same time, while I was running my business, I was also processing immigration. And immigration, for some of you who don't know, is a very, very challenging process. Even before all the limitations that were put in the recent years, immigration has always been very challenging. I would think, especially coming from the Middle East, coming from Dubai.
Yeah. Interesting. Um, how many units was that development? The first one?
The first one I developed was 66, and it was
66.
actually a commercial development. So I didn't even start in multifamily. It was an
Oh,
office
wow.
warehouse business plaza because I had come to the realization that if I build something quickly um, and cost effectively, that's it. I'm gonna get in, get out really
Yeah.
quickly. Obviously, what I didn't realize is when you take loans from banks, there's a process, there's a like
Draw
there was
process.
yes, absolutely. There was a lot of learning, a lot of setbacks. I'm kind of glad that I went through it very early on. So I am prepared for future, in future projects. When I do a pro forma, I really know what I'm talking about because I have literally been through the entire process myself firsthand.
Yeah. Yeah. What a cool journey. I mean, you come here, you got whatever money you brought, but it's not like you came here with a high paying executive job or anything like that. And you just buy this piece of property. And
Yeah,
you had a plan, but that plan was totally shot down right away
yeah.
from the start. And instead of just curling up, or instead of going back or just selling that property, taking your loss and moving on, you figured out a way to do it. And even though you didn't strike gold on that first deal, it got you to where now you can take the next step forward. It got you the experience, it got you that trust, and now you're able to move forward. What did you do after that deal, or maybe even during that deal?
So
Continue.
during that deal, I found a 24 unit apartment community. That was my first venture into the apartment world. So
Mm,
2014, I applied for the loan. I realized that, okay, we can syndicate. I was learning all about the syndication process, where we can get investors and types of funds. I found this really attractive, or so I thought at the time, really attractive 24 unit apartment community. And I went out and syndicated. I needed about $300,000 in equity, which I didn't have at the time. And so I decided that I'm going to talk to people who had approached me during my construction. Uh, phase. So as I was building up my office warehouses, the commercial project, I somehow kept on stumbling on people who wanted to invest in it, and they were like, Hamza, we would like to invest in this project. We think you're doing good work, and that is, I think, what stemmed up the courage for me to go and find other deals for them. In my mind, I think what was going on was that if I can find something, I feel like I have people who are credible enough and who will invest with me, if I were to find something that was worthwhile. And
Yeah.
so I found this 24 unit apartment community. It was not off market. It was listed. It was through a broker. So I don't think I was getting what I would call the best deal. It was a deal, and it was a deal out of multiple deals out there. And I just happened to be, I guess, the person who put it under contract. And I started running and started talking to people about this 24 unit apartment community. And I set up the syndication process. I hired an attorney, went through the entire process. And as you would know it, I exited that deal also in, I believe, 2018 or 17 with 100% cash on cash. I actually have the closing documents. I look at them every day to remind myself of that first deal that I did. And again, guess what? The limited partners or the investors ended up making most of the money. And that's when I realized, you know what? I think this is a good business model. There's some money to be made, uh, but there has to be scale to this. I don't think the money is really made at this level of investment. I think I need to up the game a little bit. And that is when I kind of dived deeper into syndication and real estate investing and helping other people really invest their money while being able to value my time and grow the company and build the brand at the same time. And I think that was really what drove me to do those things. I think my first two deals, I had to come to an agreement that I don't I don't think it was a play for money. I think it was an education is the way I look at it, right? Because as you know, investing in real estate, you have to look at least 10 years ahead,
Yeah.
because it's not going to be just one deal. You're going to try to do multiple deals, as many as you can.
Yeah. Yeah, for sure. So, you're starting these syndications, but you came from Dubai, come over here. Did you know a lot of people over here? Were your investors from Dubai? Like, how did you get people to invest with you?
A
By
lot of
being,
networking,
yeah.
a lot of networking.
So they were from the people that were investing were from here.
So what I learned is I was under the impression that I'm going to call all my friends in Dubai and
Yeah.
they're going to invest with me and it's going to be awesome and we're going to have a great time. Because, I mean, Dubai, people tend to have a lot of disposable income.
Yeah.
So
Right.
I felt almost like, this is easy. I can do this. This is not a big deal. And, it's going to be a couple $1 million. I'm sure I can fly back and, talk to my buddies and convince some of them or their dads or whatever it is, to
Yeah.
lend me some money for some time. And then quickly came to find out that there is regulation around that,
Yeah.
and there's tax implications, and I have to like almost babysit not only the business, which is the investment, but also the investors,
Hmm.
uh, all the way to the finish line. And then as I kept looking into that deeper, I realized that I don't think this is a one-man operation. I don't think one person can man and operate the investments and at the same time uh, man and operate investors and all the risks that come alongside with that. So I then shied away from people from Dubai, and I do have investors from Dubai still, but they are at the level to where I don't have to report. Like they have American investments existing and they have
Sure.
representation here locally. So I am able to take that money. However, taking money directly from like friends or family or whatever it is from Dubai, I realized that that was going to be more challenging and maybe a little bit somewhere further along the lines in the future. I couldn't have done it back then. Um, what I did find is that my construction project helped me a lot. While I was constructing, what I was doing is I was just anybody I meet, I would meet them on my construction site and tell them, hey, look,
Mm.
this is what I'm doing. I'm not, it's an indirect, uh, it's almost like an indirect sales approach is
Right.
what I would call it.
Yeah.
I'm not looking to sell you anything today, but look at what I'm doing and
Yeah.
look at what this is gonna make. And I throw a number here and there. I throw a 2x return in 2 years,
Yep.
and that would kind of get everybody excited. And it was just something I had to do, I guess, at the time in order to steer up all this hype. right? And it was that one project, and I would just keep taking people. And if I took people again, I would take them again in a couple of months to show them the progress, right? Because it takes a couple of times for someone to warm up and you to be able to build that relationship where you ask people for money, and they don't say, okay, I'm gonna think about it, right? Because for me, my close rate in my company, my business, is 9 out of 10. So every 10 investors I talk to, I can close 9 for whatever dollar amount it is that we are looking, from that person. Now, the reason that is because we constantly communicate, and we are in the building relationship strategy. We're not looking to find somebody. So we've turned down a lot of investors. Somebody we feel like if they're putting their life savings into this fund, I will not hesitate to tell them, hey, listen, you know what, I don't feel comfortable taking this much money from you. So let's try this again in a couple of years, and we'll assess the situation then. Right? It's all about building relationships, and that is really kind of how all this came to be. Did I know anything about syndication or CPAs or accounting or law firms or liabilities? No, absolutely not. It's something I had to learn and build and place as I progressed in the business world. Was my English as good as it is today? No, it was not. I still think in my mother tongue, and then process that, and then what rolls out of my mouth is a translation of what my mind processes, right? And it's just something that I feel like you have to be really fast here, especially given the opportunities that we have. And if that is the case,
what do you mean by that? Explain that. You have to be really
so,
fast.
So the multifamily space is a very, very desired place to operate.
Yep.
I believe the reason for that is because we have Fannie Mae and Freddie Mac debt.
Yep.
And Fannie Mae and Freddie Mac debt is so good that I don't think any other private, public bank, institutional lender can compete, right? You get these amazing IO terms, you get 30 years, you get low interest rates, and it's backed, right? And it's backed. It's not going anywhere. When COVID first hit, everybody in my friend circle who was not in multifamily space was panicking. Yeah. Because they didn't know what was going to happen. It's like, oh my God, my bank is going to come and they're going to foreclose on me, and they're going to do this and they're going to do that. All the multifamily guys were just sitting back and relaxing because Fannie Mae and Freddie Mac released their guidelines so quickly. Now, the guidelines were not good news, right? So they had these PIs and they had all these like operating expenses that they had built in to the loan. However, they were guidelines, right? It wasn't like, hey, we're coming after your property, because they didn't need to come after our property. Yep. The commercial guys were panicked. The CMBS guys, those guys were crying. It's like, oh my God, I have CMBS debt. We have no idea what's going to happen. And CMBS, believe it or not, was non-responsive for the first, I would say 2 weeks. So 2 weeks into this, and people don't know what is going on. So the point being, the multifamily space is a very desired asset class. And I think it's only going to get, I think there's going to be more people moving out of other spaces into the multifamily space just because the debt structure is just phenomenal, right? Right. So that being said, you have to move quick on deals. Once you look at a deal and it makes sense, I am a believer that you do need to underwrite. Just don't over underwrite, right? I've seen so many people in my office over underwrite a deal to death, and then we can't make a move on it because somebody's over underwritten it. And
just overanalyze it until the deal. If you go so deep until the deal doesn't work,
right? Right. We have one person in our office. Any deal you give him is gonna die. It's not gonna make the cut. But we love having him because he analyzes risk. Yeah. His history is based on risk analysis, right? So he looks at things that we may have overlooked, and that's great. So it may not underwrite well, however, the risk factor is completely eliminated now because we've covered everything that we needed to.
You know what can go wrong.
Right. Yeah. So so that's all I mean by you have to act fast in the multifamily space.
Yeah, for sure. You were talking about raising money. I want to dive into that a little bit because I think that's really cool that you're able to come over here, you're able to raise money on these deals right away. And there's people that have been here their whole lives, have friends and family, obviously, that are from here and they don't have that hurdle that you had. Yet you're able to raise money, and maybe they're not. And you've already mentioned a couple things, but maybe there's more that you can mention. But I think one of the valuable things you said, and this was really valuable, and people need to listen to that again, so I want to say it, is you talked about not taking money from some people, right? You don't have to take money from anybody, and you don't want to take money from certain people. If there's a person that is stretching just to make your deal, it makes no sense, as you already said. Like, it just doesn't make sense. You can't take that money because they're just not going to be comfortable the whole time. And that's going to be uncomfortable for you. Just a bad deal altogether. But when we're talking raising money, you talked about the power of that networking. Maybe you could dive deeper into that. Are there any other strategies? Are there any other unique approaches you take to raising money for your deals?
Absolutely. So the first thing, I actually get asked this question a lot, like, how do you raise money, right? That is a big hurdle for people. There's two things I think that really stop people from entering this business and succeeding in this business. And they're both intertwined. One of them is raising money. Yeah. So either a person is going to look at the situation, assess the situation or her situation and say, hey, I want to be in real estate, but the problem is, where do I get the money, right? Yeah, and now because because that's a hurdle for them and they can't get the money, they stop looking at deals. It's like, okay, I can't raise the money. There's no point in looking at deals. So, I'm just going to sit here and figure it out. And they just, I feel like they just get stuck in that cycle where it's, okay, I can't raise the money, so there's no point in looking at deals. So I can't raise the money, so there's no point in looking at deals. And it just dies right there. And then the second thing is, I can't find deals, right? And so they stop looking for money. It's like, oh man, there's such a big barrier to entry. There's these 50 players in my market and they keep buying up all the stuff. There's no point of me looking at any deals. And so they never raise the money. They don't have anything to raise money for. Yep. And so they're not raising money at any point in time. Nobody knows that this person, this individual is actually out there hustling, looking for deals, trying to raise equity for those deals because they can't source the deal. Yep. The way I would start is, if I was a little younger today, I would say, do not link these two things together. If you fail at one, that does not mean you are going to fail at the other, right? Constantly keep asking people for money, whether you have a project or not. Give them an example, give them a scenario, right? It doesn't have to be a deal. It just has to be a scenario and it has to make sense. You have to understand that people are sophisticated today. The internet has opened up so many eyes, especially in the multifamily space. You have so many gurus today that spend millions of dollars on paid advertising, doing your work for you. Literally, they are doing your work for you. I may not invest with the guru that I see online, right? But I may invest with a friend of mine who I trust, who's next to me, who's preaching the exact same business model, and I've understood it from the guru. Yep. You would be surprised how many people click on these people's pages, the people who spend millions of dollars online, and go through the entire process and the education, but never invest with them. Just because that trust element, that comfort element is not there. However, if I had a friend of mine who I know, who's in the same space, who invests in Houston, Texas, I would definitely invest with them because I trust the product. I know exactly where the money is going. The money is not going online in the cloud somewhere, and then I have no control over it. The money is actually going in this deal, and that is where it's going. So do not stop raising money, even if you have to do it at a scenario basis. At the same time, do not stop looking at deals. Reach out to brokers, put out LOIs. LOIs, by the way, a letter of intent to purchase real estate, is a non-binding document. It does not mean anything. Not only does it not mean anything, it also does not mean that you're going to buy that property. What you're doing is you're just placing your name with hundreds of other names in some cases, so that the broker is familiar. Next time he sees an LOI from Grayspear Capital, he knows, hey, you know what? I think this guy sent an LOI. Yeah, I think this guy sent an LOI in the past. Let me take a look. Oh, you know what? This person's actually sent me 30 LOIs. Let me take a look at what he's doing, right? And then have a website and send out hundreds of thousands of LOIs if you could, right? I mean, I could scan LoopNet today and look at every multifamily asset in the country and send out an LOI. What's wrong with that? There's nothing wrong with that. You build street cred, you build some type of reputation, you build some type of authority the next time you get an opportunity to really invest and you're ready. So when it comes to raising money, Do not stop raising money from individuals. At the same time, do not stop looking for deals, right? They are not intertwined. And if I were to go back in time and tell and advise myself on this one thing, this is the thing I would tell myself, uh, because I know that this has been my biggest struggle, my biggest hurdle so far. It's like, I don't have the money. I'm gonna stop looking at deals. It doesn't work that way.
Hamza, I mean, it's some awesome value right there, right? It's just really simple stuff, but so what people don't do, and I see it both ways. I see people that are like they're afraid to raise that money or whatever, and I see some people that are also thinking it's easy. Well, you said it yourself. You thought, oh, this is going to be easy. Like I can raise a couple $1 million. I know a bunch of people from Dubai, and then you dig in, you go, oh my gosh, like I that would be crazy. I can't really do that. There's a lot of people that go, oh, I'm a doctor. I know a ton of people, or I know a bunch of wealthy people. Like this is going to be easy for me to do. And so they don't put any effort into it. They don't go out and they don't actively work on raising money. And all of a sudden they got no money for their deal if it ever comes up. And then same thing, like putting your LOI out there on these properties, that's gold. Pure gold right there. So anybody listening who wants to do this business, whereas doing this business isn't like having success. Are you putting LOIs out there? Because if you're not, the brokers don't know who you are. And if you're talking with these brokers and you're never seeing an LOI from you, guess what? They don't care about you anymore. Like they might be thinking, okay, this guy might be a buyer, but if you go months and months and months and you never write an LOI, you're not a buyer to them. You're just a guy who takes up their time or a gal who takes up their time. You've got to be putting in the LOIs. And then they start giving that name recognition. It's just beautiful advice and so easy, something everybody can do. I love it.
Hi, I'm Matt Jones, and if you're like me, you're looking to grow your real estate business while connecting with others. There's this incredible new virtual experience unlike any other. I'm talking about the North Star Real Estate Conference. It's coming to you online this October 22nd and 23rd, and it's not like one of those boring webinars you find all the time out there. No, this is going to be interactive. You're going to have the opportunity to network and grow relationships with not only the other attendees, but with the speakers as well. So you can sign up today online at nreconference.com and use the code DEX, D-E-X, for $50 off.
Let's talk about, you've talked about the success, right? You've talked about how you've gotten started. You've talked about a couple of your deals. Let's talk about some stumbling blocks. What's a mistake that you've made? And how have you learned from it? How have you grown from that mistake?
Sure. I still make a lot of mistakes.
We all do.
But I'll give you the one mistake that I made when I started out. The big mistake, right? So you remember that 24-unit apartment community we were talking about?
Yeah.
So I was new. I was new to America, right? I was new to business, of course, but I was new to the entire country.
Yeah.
And I really didn't know what due diligence meant, right? Due diligence. What's due diligence? I mean, the broker told me that this is what the property is making. I mean, I can see it on his brochure. Why would the broker, not be accurate? That information has to be accurate, right? And so I was like, wow, this is such a good deal on paper. And then I realized, that due diligence actually is a process. Yeah. And you need to really, really dive deep when you are doing due diligence, not only on that individual property, but also on the neighborhood, clientele, what's close to it. There needs to be an entire process that you need to go through, which I was completely unaware of. And I'm surprised, actually, now that I look back and think about it, I'm surprised the bank actually gave me money for that loan.
Shame on them.
Because with the larger deals now, there's a lot of checks and balances in place that I feel that there are not there for the smaller deals. For anybody who's getting started, you need to go through that process entirely on your own, independent of the bank. For the larger deals, once you start hitting Fannie Mae or Freddie Mac, they'll come in pretty tough. They hire one of the top firms in the nation to do all their due diligence for them. And in fact, it's very interesting that we talk about due diligence, because I have the same name as a very famous Pakistani actor. I'm not from Pakistan, but I have a my name is very similar, and this comes up every time I want to buy a property. They're like, are you this person? And I have to go ahead and tell them and show them him, because he's in movies. He's like a movie star, right? He's an A-list actor, right? So he's all like, beautiful hair, beautiful height, and I take a snapshot of my face, and I'm like, you know what? I don't think there's a resemblance there. So that is the depth of the due diligence that they will go into, right? But with the smaller deals, smaller banks, obviously that's not the case. Please, if I can give you my biggest mistake, it is do due diligence. Do not rely on your broker's package. Your broker's package is extremely inefficient and inaccurate and out there to sell you the deal. They need to close, right? So you have to remember that. No offense to any brokers. There's a lot of brokers in town that I talk to. This is just the way the industry in the multifamily space has been set up. It is always set up to show you a pro forma, the future forecast. And that is the way it's going to remain. Nothing's going to change. So if I go out there and I start shouting and yelling that, hey, this doesn't need to be the case, you need to show me existing numbers, nobody's really going to do that, because everybody wants to sell a deal. And in fact, when I want to sell a deal, guess what's going to happen? My numbers are going to be all pro forma driven as well. So I may be shouting on the buying side, but then when it comes to the selling side,
you're going to do the same thing.
Exactly. So broker's package, very important. Due diligence, extremely important, especially if you are going with agency debt and bank debt.
Yeah. So important. And I'm glad you said that. A lot of people brush over that. And, I've probably done it myself where I haven't paid enough attention to some of those fine details. And then you get caught, and man, it can cost you a lot of money, some of those mistakes. And it sounds like that deal ended up working out well in the end, but it doesn't always work that way. And you were lucky to have a market that was rising the boats, but man, can you imagine if you had the opposite? That property maybe would be a totally different story. So you've got some cool stuff that you're doing. Let's talk about some of that stuff. So first, you're doing a Reg A plus. Kind of tell me about that. Tell me why you're doing it and what your focus is there.
Yeah. So previous funds, 506Cs, typical to syndications of this size and this nature with real estate investing.
Real quick, 506C, for those who don't know, is just basically a way you can raise money for a deal on a specific deal typically, and you can actually publicly advertise on that for accredited investors only.
Correct. So it's accredited investors only, and so I got into thinking, what is the future of real estate? Where is real estate going? I mean, the market has just not been disrupted in such a long time. It is about time that people start looking at ways not to disrupt, but to make it easier for people to invest in real estate. And of course, with the 506Cs, a lot of syndicators will have a minimum. That minimum will either be 150, 50, so 150,000, 50,000, 25,000, 20,000, whatever the minimums in each geographic territory are. Of course, in LA, you'll probably see them a little higher. In Houston, Texas, they may be a little lower, those minimums, just so that accredited investors can choose to opt in or to invest in these types of deals. With the recent direction and with the recent kind of trend with the Reg A Plus, basically we can go after accredited, non-accredited. I don't like using the word crowdfunding because I don't think that's what it is. I like to use the term micro investing because that is what I would do. I would micro invest in a deal. If I thought that the sponsor was credible and the deal was a good deal and it made sense to me, I would micro invest in it. And when I say micro invest, that could be as low as $5,000 or it could be even as low as $1,000, right? I really see the future of real estate investing, especially with the Gen Zs coming into play and everything being mobile and easy. I don't see Gen Zs becoming owner-operator type people.
Yeah.
Now, of course, there will be a lot of owner-operators. The way I look at it, I feel like Gen Z is very fast-paced. They learn very quickly, and they're in and out of things in a blink, in a heartbeat, right? Today it could be Facebook, tomorrow it's Instagram, the day after it's TikTok, right? And they catch trends very quickly, and they build skill sets in every trend. that they then move forward to the next trend. So, as you know, video is very popular. If you go and look at any Gen Z specific application right now, video is where it's at. Everybody is stimulated by video. Images no longer are working, which is why if you notice, Instagram is losing traction, whereas TikTok is now becoming like the #1 social media app. Instagram is trying to now catch up to them by, they're going to release a new thing August 1st, where it's going to be very similar to these platforms. Now, point being, I think they make technology-driven, smart decisions, but I also think that they believe in ease of investment versus size of investment. So I think a Gen Z could have the same amount of money as a millennial or a Gen X or a baby boomer. I just think the way they would want to place that money, the way they would want to allocate those funds would be a little different. I do see them investing a little bit of that into crypto, a little bit of that into the public markets, and a little bit of that into what I'd like to call flexible real estate micro investments. And that is kind of what my Reg A filing is working towards. So we're working towards being able to take investments as low as $1,000 into the fund. And that would mean, I think, Reg A plus funds, tier ones are like $50 million. That's the raise. And so that would be 50,000 investors, right? Each one at $1,000 or whatever, or whatever it is. Now, the thing is, with the correct marketing, with the correct technology, I think that's easily doable. I don't think that'll be, I don't think that will be a concern. The thing is that in the real estate space, this is very new. I think micro investing is still fairly new. There are a few people who have done it successfully, but I think you could count them probably on your fingers. I don't think there's that many people who have done that in the real estate space. I also think that the Reg A plus filing, the reason for me personally to do a Reg A filing is that it does open up the door to an IPO eventually. So via Reg A, you do have the opportunity to actually become a publicly traded company, which I think is it's a fascinating vehicle. Can you imagine what going public historically must have been like without the Reg A plus? With the broker dealers, with your RAs, with all these individual components, with your attorneys, all these things that you have to bring together at such a cost, right? There is no one person who could have probably IPO'd a company, or they would have to have been very sophisticated and had experience in IPOing other businesses before they IPO'd their own. Now with the Reg A plus vehicle, I feel like it is just it has become anybody could IPO on their own. Without having, if you're in the tech space, without having VCs, if you're in the real estate space, without having private equity involved, it is just a vehicle that has been placed there for you to be able to IPO, which I think is phenomenal on its own. That's a whole different discussion on its own.
Really, really cool. And so it's a fund, right? So you can buy multiple pieces of real estate with that you're going about. And I think that's really interesting. Now, some of the things, like, I think people, and myself included, you go, well, geez, you're going to have that many investors. How do you keep track of them? How do you communicate with them? Like, how many K1s do you have to send out? How many K1s? Is it worth it? Does it make sense? What's going through your brain in that process? What are some of the maybe it's not worth it, or I can get by this pretty easily because.
Yeah. So when I say the minimum is $1,000, first of all, your hope is that not everybody's investing $1,000.
For sure.
Yeah, because that would be a lot of K1s. 50,000 K1s, I think, would be. And for those of you who are listening, K1s are basically documents that a general partner like myself would have to send out every year in order to justify the income and the expenses. Hopefully, there's a lot of depreciation on yours if you guys have them. If not, then the idea behind it. What is the idea behind it, right? I don't think, just like, remember when I told you that first investment I made, I don't think I really made that much money. I don't think I made the money that I was hoping to make. I think if you go in with that mindset into a larger sized venture, where I don't think I'm trying to justify income at this point. I think it is more trying to find a viable product that works for people and allows them to micro invest. Can you imagine if somebody told you, hey, I'm a partner in 1,000 units. Oh, that's awesome. How much did you invest? It's like $10,000, right? But for $10,000, they got access to invest in. They got to diversify basically.
Yeah.
I mean, into like 1,000 doors. That's like amazing. It's like, how do you even? That's unheard of, right?
Yeah.
I wouldn't be surprised if I find a Gen Z 10 years from now, whether it's with my tech, my platform or somebody else's platform. I think everybody's going to jump on this bandwagon
Yeah.
as soon as
I agree.
we have a few. As soon as we have a few success stories, and I really don't think it would be strange to hear a Gen Z who would still be in their late 20s at that point and be like, yeah, I'm a partner in 30,000 units. And you'd be like,
Yeah.
wow, how much has this person invested? And then you come to find out it's like 30 grand.
Yeah.
You know what I mean?
Yeah.
But he still, or she still has diversified. And I think that is really the goal that I am entering this. That is the vision that I have in entering this fund. I think that would be a really cool concept, right?
Yeah.
Now, as far as
And it becomes
managing
tradable too.
Exactly. LP interest is absolutely, yes. That is that is also something that we can dive into. But that's going to be a long conversation.
That's going to be totally different.
Yeah. But as far as platforms, I do believe that there are a lot of platforms existing out there that automate about 90% of the process.
Yeah.
If you have the right people in place in your business, or if you are the right person taking care of your email marketing, drip campaigns, reporting, audit. Like, I know these words sound complicated and it seems like, oh my God, how am I going to do all that? But I feel like in the end, with enough time, people can definitely handle all those tasks if their mind is really in it,
Yeah.
right? For me, I know that there's tasks that I'm really good at, and I know that there's tasks that I'm really bad at, and I compensate, right? I have people who I will hand over the tasks that I'm really bad at. And so where I'm getting at with this is I'm really bad at technology and implementing the processes that I need in order to communicate with everybody. I'm very good at communicating. I can pick up the phone and call people all day. I have no problem doing that. But when it comes to sitting behind the computer and figuring out which email needs to go to which investor for which deal, and whether that investor is invested in more than one deal or not, all this is now automated. All you need to do is click a few buttons, and there you go. It happens. So I wouldn't worry about too much about reporting or how to systematically process every investor that you have. I think that's a fairly simple process, and there's plenty of CRMs or investment softwares that do that for you.
Yep.
Yeah.
Well, and that leads into the VAs, right? You're working with a lot of VAs.
Yep.
Certainly, they're likely a part of some of that stuff too. But you're working with VAs to use them for multifamily property management. I don't know if you want to dive into that. We are running out of time, so maybe real quick dive into that, and then we can wrap up.
Yeah. So I hired my first VA. I realized that, wow, man, they have really good skill set. And the reason is, believe it or not, they're back-end support for Fortune 100 companies. Fortune 100 companies, man, like that is amazing. You have a person on your team who is trained by Fortune 100 companies to be their back-end support. Can you imagine the amount of tools and the amount of information and system and processes that this person has in place just because of prior training?
Yeah.
That's phenomenal.
Yeah.
So the first VA I hired had that experience, decided that, wow, this is so good. These guys come with an arsenal of tools. I can definitely use them to systematically do everything for me. I hired 16 more. And now I have virtual assistants. I have virtual assistants who manage virtual assistants. Like literally, I have a hierarchy. So if you look at the business chart, the org chart, is what they call it. You will notice that the org chart is now, it consists of 30 people, and half of them are in a different color. And those people, I'll have green and blue, and the blues are all VAs. They're all remote. And I think that is the future, really, of business.
Yeah.
Of course, there's tasks that you can't outsource. There's sensitive data that can't leave the office. There's a lot of things that you can't get by. Those have to be done here in the US. So of course we do hire locally for that, but there's tasks that are very repetitive, very easy to do, basic, that type of thing, process related. You can give all of that away to VAs and not have to worry about it because they are trained, man, they're like computer ninjas. It's amazing. It's amazing what they can do.
Yeah, good stuff. I mean, anybody's looking at expanding, you have to look into VAs, what they can do. And man, they come at so affordable at times. And so, yeah, it's definitely worth looking into and digging in. So I got a couple last questions before we wrap up. And I want to ask you, what's your favorite book that you can recommend to our listeners?
I do read a lot. I am reading a book. It's called, it's by Tim Ferriss. It's called Tool for Tribes, or Tools of Tribes, I think. And it is a very large book, and he interviews 300 people, including Arnold Schwarzenegger, the governor of California, and a couple other people. And basically what it does, this book, why I'm so fascinated by it, is it gives you hacks. It gives you life hacks, like how to make things easier. So whether you're looking at personal health, personal wealth, well-being, meditation, keto, yoga, CrossFit, running your next marathon, he basically, out of his podcast, I believe these are snippets out of his podcast, and he just talks about hacking life and making things easier. And believe it or not, it's called Tools for Titans. There you go.
Yep,
That's what it's called.
that's what it is.
Yeah.
Okay. Yep.
Yeah. So and I just think some of the stuff he says or they talk about is fascinating, you know, like which supplement to take if you are trying to bulk up versus if you are trying to shred, you know. And he'll talk to like a triathlete who lives at 16,000 feet of elevation and, you know, practices this and does that, but he'll give you the exact brand and you know, price. And so you walk out of that book with a lot of takeaways.
Yeah.
Right. And so that's a book that I've recently been fascinated with, and I'm actually reading it as we speak, and every day just learn something new, you know, and that's
Cool.
amazing.
Yeah, definitely. So last question, what are your 3 pillars of wealth creation?
3 pillars of wealth creation. Surround yourself with the right people is number. That would be all 3 pillars, by the way, if I could put that much, if I could put that much emphasis on that. Please surround yourself with the right people. It will accelerate your growth and your knowledge pool so quickly, and you can always ask them for help, and they are always there to help. That is one thing I love about the American society. I have yet to be turned down by somebody who has told me I don't have enough time for you, right? So surround yourself with the right people. Build relationships. That would be my second pillar. My close rate today is 9 out of 10. So I am building wealth, right? And all that wealth has been created because of the trust that people have put in me. And the reason for that trust is because I build a relationship first. I'm not looking to close a deal. I'm always looking to build a relationship. And that is what I truly value. Third pillar is have fun. If you are all in, please have fun doing it.
Yeah.
I think having fun will not put you into business fatigue. When you get hit by negative news, you're still okay. You know, you're enjoying it. You're there for the ride. Real estate is a long-term business.
Mm-hmm.
You will rarely find people who are you know, in the business short term. And the people who are in the business tend to stay there for 30 or 40 years.
Yep.
It's very common in the real estate space. So have fun, you know.
Yep.
3 pillars.
I love it. You're definitely going to get smacked around a bit doing this business and any business. You're going to get smacked around a bit. And if you're not having fun, man, it's just, it's going to be depressing. You're going to get out of it. You're not going to have any, you're not going to make any money. So, how do people get in touch with you? They want to learn more about you.
htownhamza.com. That's my website. And of course, my company website is grayspearcapital.com. But if you want to get in touch with me directly, the fastest way would be through my website, htownhamza.com. I have a form that you can fill out there on one of the pages, and that's it. Awesome. It goes directly into my personal email, and I respond in, you know, less than 24 hours.
Sometime. Yeah.
Yeah.
Awesome. Well, it's been a pleasure having you. The wealth of knowledge. Really enjoyed speaking with you.
Yeah. Thanks for having me, Todd. This was great, man. I had a lot of fun.
Yeah. Have a fantastic rest of the day.
You too.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.